I'm hearing a lot more people talk about a little bit of news that's come out of the US recently.
Yep.
Last couple of weeks. So Donald Trump, of course, he's mentioned that might be a good idea to up the ante when it comes to mortgages and go for like a 50-year mortgage.
Mortgage term rates, or mortgage terms rather, being reviewed, 50 years. It's interesting.
What are your thoughts, man? We're currently at 30 in Australia, I think is quite normal now. I remember days when it was 25. I remember days when it was 20, maybe showing my age a little bit.
Well, no, actually, I was doing a bit of research into this because I saw the 50 years and it just really sort of shocked me. I was like, well, I do remember it being 25.
Yep.
But I actually had a look into this, and in the 80s, so it was actually 20 years.
Yep.
And then from the 90s to about 2000s, it went to 25. And now the norm and the traditional, what we know, is a 30-year mortgage. But now we're talking 50 years. So, it's a bit different to what we're talking about in the 80s. And obviously it's changed because of where house prices have gone and wage growth. And for people to be able to afford to buy houses, they need to have a longer term, unfortunately or fortunately, depending on how you look at it.
It would be a bit of a jump. We're used to the 5-year incremental jumps here in Australia and probably overseas as well. But Trump going straight to 50, or he's suggesting straight to 50. Why do you think?
Look, I don't know why he's going. I mean, obviously it's because of the affordability component and wanting to get people into homes. But I think one thing we should note is Australia is very different to America. So when we look at our context of going from 20 years to 25 to 30 years, now I know a lot of people say that when America sneezes,
I was going to say,
Australia
we do tend to follow, yeah.
We do, but I don't think it's going to go from 30 to 50 straight away. I think there's going to be some balances in between, and there may be a decision whether it even goes from 30 to 35. We know historically banks and even guidance with ASIC and APRA, the governing bodies, don't want to see, or they know that banks don't like going above that 30-year sort of mark because it sort of increases the risk on a portfolio. I think even when I was talking to you earlier about this itself, the numbers actually are the reasons why the risk. I mean, you're paying almost double the amount of interest over the difference between a 30-year mortgage and a 50-year mortgage, you'll be paying about double the amount of interest over the life of the loan, which is substantial, right?
The numbers are interesting, right? So I did some comparisons on $1 million loan. So say you put down $200K, you got a $1 million mortgage on a $1.2 million house.
Price,
yep. And I did the numbers based on 6% interest because I know, most people getting in the low fives at the moment, low to mid fives, but the rate will fluctuate in the 50 years. I've just gone 6% just as
on a $1 million loan. This is really interesting.
$1 million loan. So on a 30-year loan, the monthly repayments on $1 million at 6% is $5,996 per month.
Are we talking principal and interest?
Principal and interest. Yep. On a 50-year loan, that would become $5,283.
So about a $700 per month.
It's a saving of $713 a month.
Saving? Is it a saving? Let's see.
Well, that depends on what you do with that $713, of course. But to me, that's not as high as I expected it to be.
What were you thinking? It'd be like $2,000 difference?
I thought it would be, thousands, because if you break that down to your weekly budget, it's an extra, $170 a week.
Yep.
It doesn't move the dial that much, So I don't think it's a massive monthly saving. That you mentioned the amount repaid. So over 30-year loan, the total repayable on $1 million at 6% would be $2,158,560. So you're paying for your house twice essentially over 30 years. The interest paid is obviously $1.158 million. On a 50-year loan, the total repayable, can you
Brace
guess?
yourself.
Can you guess?
In interest or?
Well, what do you reckon? It's double in 30 years.
I reckon it'd be above $3 million.
It's triple. It's $3,169,800. So it's an extra almost $2.2 million. You're paying for that mortgage.
So the interest over that additional 20 years from a 30-year to 50-year is double the amount of interest.
It's double the interest, almost double, $1.011 million extra in that extra 20 years to pay it off. The other thing that's interesting as well, one last final piece of data or one of the last final numbers that I did run was the equity building. So assuming, let's not include price growth or property price value growth. All right, which may not happen. Probably yes. But in a 10-year period on a 30-year loan, you would have paid down $170,000 off your principal.
Okay.
In the same time period on a 50-year loan, it's $90,000.
Yeah, it's a substantial difference.
So it's half that equity. So really important, really interesting numbers, and I really want to unpack that.
There is a lot to unpack there. I think. Look, the other component to it is, We know that a lot of people, when they're buying property, they don't go the full 30-year term anyway. So there's anywhere from 5 to 10 years. I think it's roughly 7 to 8 years where people are buying and then they're selling that property or they're turning over. So it allows people to get in faster. If you're, $1 million loan, your repayments are roughly $6,000 versus $5,200 per month. That's $700-800 difference. Does that allow you to get in faster? So I think there's pros and cons to this. I'd love to actually unpack some of the cons and the pros. So I think obviously the pros are clearly lower weekly or monthly payments. So making it much easier.
To get it.
And the other points that I want to focus on, so easier borrowing capacity. So all of a sudden, those people that are renting, that are paying X amount per week, that are comparing it to a 30-year mortgage repayment, what that would be per month, the gap might be fairly large at the moment. But then when you chuck in a 50-year mortgage, all of a sudden, what they're paying in rent versus what they could be paying in a lower monthly mortgage repayment, all of a sudden become a lot closer. So I think there could be a lot of decisions where people go, you know what, renting here, provided you got the deposit and whatnot, and there's 5% deposit schemes out there as well, provided that you've looked at the scenarios, people might be thinking, well, I'm not going to rent anymore. I'm actually going to go in and have home ownership and have a 50-year mortgage, and maybe I don't run it out the full 50 years and I'm there for 8 to 10 years, but I'm able to get in faster, have access to the capital growth that happens in the property market, roughly 5 to 6% per annum. I think that could be a real big factor that the renters are now looking at this going, I can actually get into the market because it's the same as what I'm paying for rent.
It's interesting you mention rent because I've seen people online compare it to rent. Basically, it's the same as rent your whole life, but of course at the end you do have a property, right? What I find interesting is the sort of the emotion, the psyche behind buying. So people, I think, especially younger millennial and Gen Z, they're actually scared to get into property because they see it as this long-term thing that they're committed to. Oh, I'm locking this in.
It's just got a lot longer. Yeah.
It just got longer. So people are already worried about like a life debt, right? It's now like a beyond your life debt. Like
it's like a grave debt.
Well, if the average first home buyer age now is 37 in Australia and you're getting a 50-year loan at 37, you're 87 when you're done. That is well beyond retirement age. But again, like you said, that's I'm assuming people go the distance. We see people, like you mentioned, they will refinance. Typically, a lot of first home buyers, I think, refinance after like 2 years. They might get into a better deal, or like rates might have come down a little bit, or they might be able to negotiate because there's some equity built in now. So they do typically refinance at 2 years, but also people recycle their home. People don't have the family home for 30, 40 years anymore. People sometimes are moving 8, 9, 10 years in.
Yep.
So they are recycling that debt.
I think it goes to the stages of life that people have. So if, a single couple, like a couple or a single even, there's a different house that you need for a particular family as you grow. So I think there's different houses and different needs as you grow.
I still think it's a scary starting point to go in and go, okay, 50 years, I'm locked in. I can't travel anymore. I can't buy whatever. Like it's a difficult emotional point. I think for first home buyers looking to get in, it would be really scary.
It would definitely be scary. Like you're seeing a 25-year-old saying, okay, I'm going to have this 50-year mortgage attached.
Yeah.
I'm going to be 75 by the time I pay this off. But then again, I think you got to look at whether that actually you run through those scenarios. So look, that's definitely a couple of the cons.
But I think it works for investors, right? Because an investor, all of a sudden, they're all about cash flows.
But would it be available for investors? That's the other component.
That's another question.
Is it a 50-year across the market for all parties?
Well, it's all hypothetical at the moment. We don't know if it's happening in the US and we don't know if it would happen here. But hypothetically, if it was available for investors, they're looking at cash flows. An extra $700 per month into their cash flows makes a massive difference. But do we need to help the property bros buy even more properties and inflate prices?
And again, I don't know if it comes back down to will that be available for them? Like if someone's got a 10 property portfolio and they apply that across their portfolio, that's a substantial amount of, call it savings in the mortgage repayments, and they're just going to double down on buying another 2 or 3 additional properties, right? If they can afford. I think some of the other cons that I can see here, so we talked about debt lasting into retirement. Whether or not that materializes, I actually don't think that would materialize. I think there'll be definitely some cases where the 50-year mortgage goes into retirement, but I don't think that's going to be the norm. I think people would have the 50-year, if it does get to 50 years, people would have a 50-year term. They'd get sort of halfway. There's a good equity component now because property prices have increased, you'd assume. And then they might sell that and then look to downsize into something else. So they've got sufficient equity and they may not need that mortgage going into retirement. I think what would scare people with a 50-year mortgage is that prospect of potentially having debt into retirement, or alternatively, they're not being able to retire because they have debt. I think that's a very scary prospect.
There might be, and I think this is scary too, but the opportunity to, if you get into those 80s and you still have your mortgage, to tap into your super to pay it out. Essentially,
You reckon people will do that? Tap into super to pay?
I mean, we have balloon payments on cars.
We're talking balloon payments on property.
Balloon property. It might be like a air balloon, not just but it's actually scary to think that all this super we're saving for our retirement in a scenario like this might be used to actually complete the purchase of a property. It's actually scary. It's not the purpose of that super, right? So it's a tricky situation, and we're just playing with all these levers, and I don't know what the effect's going to be.
Yeah, look, usually I'm either have a very strong opinion, either to positive or negative on particular policies. This one I'm actually sitting on the fence with. I think there's definitely positives and negatives. I think some negatives are that, in my opinion, it will obviously inflate house prices, that people have additional affordability. Do people look at that as a saving, or do they look at that as they can spend more on a property purchase, therefore pushing up housing prices? I think another negative is the prospect of having debt into retirement. That was, it's not ideal. But then on the positive sides, like, I think if people are looking at what they're paying in rent and it's very similar to what a mortgage repayment could be, then I think that could be a really interesting prospect for the market generally, that renters are now able to break the housing cycle or break the rental cycle and achieve home ownership. And not only do those rental payments now go towards paying off their mortgage, they get access to that capital growth. I think that's a real strong positive.
You're on the fence. I'm against. I'm going to sit on the against side, because I think, yes, numbers, if you do the numbers right, it can work. You can game the system, but there's going to be people gaming that system. There's going to be inflation of property prices even more so than usual. There's going to be people that are on the fence that are scared to purchase. I look at the emotional side. I think emotionally, you look at the prospect of 50 years, whether you're going to go the full distance or not. You look at that prospect. You tell a 25-year-old, you're going to be paying off your mortgage for 50 years. They go, stuff that, I'm going to Europe. Stuff that, I'm buying a pair of shoes. Stuff that, I'm buying.
But I think it comes down to getting the right advice too. Like, I think if you really sit down with someone and explain the situation to a first-time buyer, saying, look, the reality is people don't hold on to this for 50 years or even 30 years.
Individually, no doubt. Individually, you are correct. But at scale, emotionally, it can only have a negative impact, I believe, on the whole system.
Well, I think in the interim, it's not going to go from 30 to 50. In any case, if it does get reviewed, it would go from 30 to 35.
We're already seeing 35-year mortgages.
We're seeing 35, and I've seen some 40-year
which
from
is scary.
non-bank lenders. Look, it hasn't taken off, so there must not be a massive market for that.
I guess it depends on who there might be some tighter regulations. Like myself as a 40-year-old, I probably wouldn't be able to get a 40-year mortgage right now. I don't know what a 50-year mortgage would look like, right? But for someone that's maybe, early 20s looking to get in, maybe that 40-year offer is available to them. But it is interesting to see. I think we are likely to see 35 as a norm here in Australia very soon. I think that's the logical next step.
But I think also ultimately it doesn't affect the underlying problem of house prices being expensive relative to people's income.
Short term.
And it doesn't help affordability. It helps of being able to afford a mortgage for a particular property.
Yeah.
But I think if people had the option to go back to a 20-year mortgage and still be affordable, people would do that.
Yeah.
So I think it doesn't actually help the underlying issue that property in Australia, unfortunately, is unaffordable.
And where's it end, mate? 50-year mortgage. Do you do 70? Do you do 100? Is there a multi-generational mortgage? If you died, your kids have to pay your mortgage?
As we've seen unfortunately with government policies, I don't think it does end. I think they just keep going. There's not many incentives out there for government to see property prices fall, unfortunately. And when 2/3 of the Australian population own property or have a mortgage on property, it's not going to be a popular policy to have property prices falling. So I think that's ultimately going to lead to additional policies to help stimulate and get people into property.
And that's what it always comes down to with government. Is it popular? Like I said, I've been seeing this a lot in the news. I'm sure we're going to see more of it. Interesting to see what America does, and then interesting to see how we react. But as always, when there's something like this in the news, I want to talk to you about it. I want to know what's going on in your head. So thanks for unpacking it with me, man.
Pleasure, mate.